All right. What's good, Demo? All good. Bet. Come and vibe with me tonight. How you trading in, Demo? How you trading, man, bro? Sticky with the blicky. Who's that guy? I'm about to do my breakdown in a second. Been going, man. Still in the learning phase on demo account. Ain't nothing wrong with that, bro. All right, let's go. Let's get into the breakdown. Let's start off with NAS 100. I think that's okay. Not NAS 100. It was US 30. There it was. Yeah, start off with US 30. Looking at US 30 on a daily time frame, overall aggressively bullish. Price is making clear new highs and new lows. Daily is bullish. Going on a 4-hour time frame, 4 hours bullish as well. We're making a new high above these highs over here. Just broke out of the overall range, which is really good. Creating clear higher highs and higher lows. Going on 1-hour time frame. 1-hour time frame is bearish, right? It's bullish, but internal structurally bearish. We overall bullish because we took out this high over here, but we're internally structured bearish because we are making clear lower lows and lower highs here. So with that being said, let's mark off our current high on a 1 hour, our current low on a 1 hour, and that's our range. So this is the current range that the US 30 is in. We're having a break and retest of this overall major level of support down here. Let me skip this ad. Okay, boom. And so this is the range we are overall in. I want to take buys on US 30. Looking at these buys though, don't want to take them until we break above this 45,000 area. Above this area, we have clean buys looking to the left hand side to fill into the rest of this range. And I do like the setup. Let's look at our 4 hour. As far as sells, I wouldn't want to sell until we come down, take these 4 hour lows down here. Then looking at these sells down here, we can sell into this level. Other than that, you can have some risky sells down here, but I really don't want to take these. That's for US 30. I like that. Let's look at some Forex pairs now. Before we get to Forex pair, look at NAS 100, right? Daily time frame, overall bullish. We are at all-time highs, making a new high right here. So keep that in mind. 4 hour time frame is bullish as well. We have an impulse up with no real correction. So 4 hours is aggressively bullish as well. Look on the 1 hour time frame, same, aggressively bullish. So looking at the 1 hour time frame, this is our current high at all-time highs now. This is our previous high, meaning this is our break of structure, and this is our current low, right? So we just had a break above this range, and now we can look for price to pull back into this area to take buy continuations alongside the 4 hour and 4 hour and daily already being aggressively bullish. As far as other than that, taking sell up here is definitely not the good idea because you'll be selling all-time highs. And there will be no structure points to base your stop loss off. So in order for me to trade US 30, not US 30, NAS 100, I need price to pull back into this 24,000 area for some potential buys with structure. Other than that, if I end up selling US 30, if I end up selling NAS 100, it wouldn't be until price clear these lows down here, and then we can look to trade inside this range for price to come down, pull back into this area. So we have some potential sell down here, but other than that, I'm strictly looking for buys as long as we maintain above 24,140. Let's pull up the YouTube chat. What's good, Vadim? Been trading gold. Just saw you come up on a notification, so decided to click. What's good, bro? I'm gonna do a gold breakdown as well in a second. But right now, we're gonna get into GBP, JPY. Okay, I'm not even gonna do GJ. This shit looks trash. I don't want to trade this. Actually, we're gonna do it anyway. Overall bullish on daily time frame. Looking on the 4-hour time frame, we're overall bullish as well. We're making clear higher highs and higher lows, as you can see here. Going on the 1-hour time frame, we are bullish, but we may be going bearish. So keep that in mind. So I want to overall buy more than I want to sell, but we could take some sells if our 4-hour time frame shift bearish. Where does that happen at? If we end up taking out this low down here, this will be the 4-hour shift in bearish where we can sell below this area. Go back to our 1-hour time frame. Looking at the 1-hour time frame, this is our current high up here. I mean, it's the highest point before price started to retrace without taking out a low. And this is our previous high, which this break just did fail, so no point of having it marked up. And then this is our current low, being this 4-hour low down here, also alongside this being our 1-hour low. So if price could clear this level right over here, we could look to take some sells. This is a valid level of support. As you can see here, we held as support here, held as resistance here. So we could look to see if price could break below this level of support. We can see if it holds as resistance to take trend continuation sells to the downside and looking to fill in the rest of this range. Looking left. All right. But as far as buys, I wouldn't want to buy just yet. I mean, it would have been off of this break and retest here, but this retest seemed like it's failing. All right, we have a 1-hour closure back beside the range. Does really pretty much look terrible. Let's measure this Fibonacci pullback. Okay, so actually we may be able to take these buys here. We actually may be able to take these. Let's look at the daily candle. So buying here, the daily will be flipping bullish, possibly to pre-break this current daily high as a target, which would be up here. That's actually not bad. Let's look at the 5-minute time frame. Looking at the 5-minute time frame, we have a lower low, lower high, lower low. So we have some possible buys above this area right over here. So we're going to annotate over this potential buys. If I'm talking too fast, let me know, chat. We do have potential buys above this high up here. Let's see how this high aligns with the 1 hour. Okay, this is our 1 hour doji candle above here as well. So if we could break above this high, yeah, I like these buys. We have stop loss below this low sitting at this support, and then we look to target these highs here. And our daily candle will flip at this high here. That actually looks clean. Let's continue. If you got any pairs y'all want me to break down in the chat, let me know. Get into gold though. Looking at gold, we are really high in price as well. On the daily time frame, looking at the 4-hour time frame, again, still all-time highs. We just broke these previous highs to the left-hand side here though. We may see a pullback for a trend continuation on the buy side. Look on the 1 hour time frame, we're bullish. So we bullish on the 4-hour daily and 1 hour. It makes more sense to buy rather than sell, just because we have more time frame telling us to buy rather than telling us to sell. So I'm only looking for buy opportunities so far. Look at our 1 hour time frame. This is our current high. This is our previous high. And this is our current higher low. So I guess this is the range that gold is in this small range. We do have another range sitting right over here. So we could look to take a buy here or a buy here. I really don't want to buy inside this consolidation. Based off where price is currently at, yeah, I don't want to buy inside this range. We already have a break. We already have a retest. Retest already started to fail again. Like I don't want to trade this range now. So our new range to trade, it would be if we have a deeper pullback down into this area, making this a fib level play. So yeah, so this level of support does line up with a 50% retracement. That looks good as fuck to take. If we don't get the pullback down here and we just continue higher and give us a new break and retest above this area, I'll look to take these buys. Both of these buys look good though. Let's continue. We did NAS 100. Don't really like that. We did US 30. US 30 looks pretty cool. So far my top 2 is gold and GJ, but I like GJ more than I like gold. So we're gonna adjust this a little bit. And then let's look at GBP USD. GBP USD, we overall bullish on a daily time frame. We're taking out these highs above here. Look at the 4-hour time frame, we're bullish as well. Again, we're taking out these highs up here, making new highs. 1 hour time frame, bullish as well. All right, so I want to buy rather than sell because most of our time frames are telling us to buy. It makes more sense to buy. We're going to mark off our current high, our previous high, which is the same level, then our current high or low, which would be this low down here. We already had this break and retest. It already got triggered. This was a potential entry. It already played out. Just can't fall into this trade. So now we need to wait for a new break and retest, which would be above these highs up here. That's for buys. Other than that, for sells, I really don't want to sell because our time frames, our bias is bullish. But in order for me to sell, I need to see our 4-hour shift structure first. And it doesn't happen until price comes all the way down here to take these lows. But if we end up taking off all the way down here, I still wouldn't be able to. I still wouldn't be looking to take sells down here. I'm only looking to take sells below this area. Below this area, we can look to target these lows here. So that's not something that's going to happen today. Not really interested in that. Let's continue. I don't deserve you. Hey, say, thanks for the follow, bro. Welcome to the stream, gang. Saji. I think I said your name right. Hopefully I said your name right. Let's continue though. Looking on NZD/USD. Overall, going bullish as we transition into taking out these highs here on the daily time frame. On the 4-hour time frame, bullish as well. As you can see, making clear higher highs and higher lows. Makes more sense to buy. Let's go on a 1-hour time frame. 1-hour time frame is bullish as well with this structure here. Still makes more sense to buy. So we're gonna go with that. Can you explain the price gaps currently on NASDAQ? Yeah, give me a second. Where was that? Okay, looking at 1-hour time frame, we want to buy overall. So let's mark off our current high, which would be this high up here. Actually, I want to use this high up here. This high up here, this is our current high. This is our previous high. This is our current high or low. Okay, so a 1-hour time frame goes bearish below this area. As you can see from this impulse up to this retracement, this is a 50% retracement on the fib level. It was possible entries here, but we don't want to trade off of it anymore because it's already got mitigated, right? So now we can just focus on this price action. This previous high retest ended up failing because it gave us a deeper retracement into that fib level, so we could delete this level as well. No need to have that on our screen to cloud our judgment. So we're going to focus on this being this overall range. And this price action is choppy. I don't want to trade this kind of chop. We're looking like we're going to come down to create some equal highs here. And this is where price is going to make a decision to either break this level and continue, or we reject off of this level and start to reverse. Right, this is a decision level. But as far as buys, I wouldn't take a buy until price breaks, closes above this previous 1-hour high, and then gives me a retest for a trend continuation alongside the 4-hour and the daily already being in bullish structure. That's a high probable setup. As far as that, I wouldn't want to sell until our 4-hour goes bearish, and our 4-hour doesn't go bearish until price takes this low. If we do take this low, either during the New York session or later on today, we possibly could have some sells down here. Looking to the left-hand side, this is clean traffic to fill in the rest of this imbalance to even target these lows down here. That looks clean. You said, you want me to explain the price gaps on NASDAQ? That's what you said? So when you're looking at NASDAQ, right, go here, type in NAS 100. All of these different brokers you see here are different price action providers, right? The one you pick, depending on which one you pick, you will see gaps. So I'm speaking, if I pick Pepperstone, you see no gaps here. If I pick FXCM, you see no gaps here. That's the one I mainly use. Forexmarket.com, no gaps. But depending on which one you have, you may see gaps. But you're probably not looking at it as in NAS1. You're probably looking at it as MNQ. Okay, this is where you see the gaps at. The gaps just mean the opening price was different from the closing price, which leads to gap. So looking on this 4-hour chart, you see this 4-hour candle down here closed at 14/12 at 4 p.m. What is that? This is a 5 p.m. candle. Our next candlestick opened all the way up here. So this will lead to gap. So it just lets you know that the closing price is a lot different from the opening price. But to fill the gaps, just go to up here and pick a different liquidity provider based off of what it shows here. MNQ, NQ, NASDAQ, they're all the same. This price action just reflects a little bit differently. But so as you can see, this is M and Q, and you see this price is all the way up here. But look at the price action. Let's go to the daily time frame. Okay, look at this daily price action. If I go to NAS 100, you're going to see the price action is relatively the same. See, it looks exactly the same. So M and Q and Nasdaq and fucking NQ, NAS 100, those are all the same things. See, if I just go to regular NQ, it looks just the same as NAS 100. It looks the same, just the same as NQ. I mean MNQ. Hopefully that answered your question. Let's continue on. So we did GJ. Let's go to 1 hour time frame. We did our GJ analysis, did our US 30 analysis, we did gold, we did GU, we did NAS 100, we did NZD/USD, Euro USD. Look at Euro. Looking at Euro, this price action looks shit. I don't want to trade this at all. Like, look at this chop. I don't want to trade in that chop at all. I'm not even going to do a breakdown on this because I know I'm not trading this shit. Let's put this at the bottom of our watch list. That is very low quality. And we did this already. Let's look at UJ. This looks shitty as well, but it looks better than EU at least. Daily time frame, we're overall bullish. Let's zoom in. As you can see, we're making clear higher highs and higher lows on the daily time frame. Good on the 4 hour time frame, we're bearish on the 4 hour. We took these lows down here and never rebroke these highs. Our 4 hour is bearish. Look at our 1 hour time frame. Our 1 hour time frame is bullish. If our 4 hour time frame is bullish and our 1 hour time frame is bearish, only way I'll take a trade is if they line up with each other. So either the 1 hour goes bullish alongside the 4 hour, either the 1 hour goes bearish alongside the 4 hour, or our 4 hour goes bullish alongside the 1 hour. One of those have to happen. So to make this a little bit easier, look at our 4 hour time frame. We're overall bearish. Mark off the most recent high to tell you where the 4 hour goes bullish. That will be this current high all the way up here. That will only take buys if this 4 hour flips bullish, and that doesn't happen until price comes up and reclaim this high. That's that. And let's go back to the 1 hour time frame. 1 hour time frame is bullish at the moment. Only way I'll take sales if the 1 hour goes bearish. So I'll mark off my current low for the 1 hour time frame, which will be this low down here. As you can see, we have a higher high, higher low, equal highs. I wouldn't really want to take sales until our 1 hour goes bullish alongside the 4 hour. So either one has to happen. Either the 4 hour goes bullish with the 1 hour, or the 1 hour goes bearish with the 4 hour. One of those have had one of those options. So either we could sell below here where the 1 hour goes bearish alongside the 4 hour, or we could buy above here where the 4 hour goes bullish alongside the 1 hour. If we sell below this area, we can look to target these lows down here. And if we buy above here, we can look to target these highs up here. Very simple. That's it for GBP JPY. Let's look at GBP CHF. Daily time frame, overall bullish. I want to say we're bullish. We took this high over here and never reclaimed this low that ended up taking that high. So we're bullish on the daily time frame. We're just in a bearish retracement. Looking on the 4 hour time frame, we are bearish, right? We're bearish because we took out these higher lows. Now we see we kept clear lower lows and lower highs. So we're bearish on the 4 hour time frame. Let's look at the 1 hour. 1 hour is bullish. So same thing with EJ. I need a 4 hour and 1 hour to at least be in sync. So let's go to 4 hour again because we're overall bearish. I want to know where does the 4 hour go bullish. Well, this is the most recent high that created this new low. So we're bullish. We're bearish until we reclaim this high. So for buys, I wouldn't want to take them until the 4 hour shifts bullish above this area. 1 hour time frame. And as far as for sales, in our 1 hour time frame, we have clear, higher high, higher low, higher high. Very simple. This is my most recent higher low before making a new high. So as far as sales, I wouldn't want to take them until price breaks below this range to continue down with alongside the 4 hour already being bearish at the current moment. And if we take them sell opportunities, we can look to target the bottom of this range down here. And if we take these buy opportunities, we can look to target the top of this range up here. But as far as trading inside this current price action, this is a choppy range. I really don't want to participate in there. What else do we have? USD JPY. Let's do it. Daily time frame, choppy as fuck. Like, who would want to trade this price action, bro? This shit looks terrible. Like, I don't want to touch that. Get a 4 hour super chop. Yeah, we're not even gonna touch that. No need to even doing a breakdown on that. Just not, definitely not trading that. Let's look at AU. AU daily time frame overall aggressively bullish. We're making a new high. Very self-explanatory. 4 hour time frame overall bullish as well. We're making new highs. 1 hour time frame. 1 hour time frame is bullish as well. And 1 hour time frame. This is our current high. This is our current high. This was our previous high. This is our current high or low. Our breaker retest of our previous high already failed, so no reason to have that still up on our chart. So now we can just look at our current high and our previous high or low. We want to take buys, so we're looking at a trend continuation above these highs. Look at our 4 hour time frame again. 4 hour time frame goes bearish below this level. A 4 hour time frame goes bearish below here. So I really wouldn't want to sell until price comes down to take these lows. This would be the high quality sell. Other than that, we could have some counter trend sells here, which will be a 1 hour reversal, but still counter trend to the 4 hour. So this is a risky sell position. We're gonna make that a dotted line just to note that. But even if price pulls back into this area, I don't want to buy off of this level again because we already had this break and retest here. So I don't want to see this level get retested again and then take a buy. That doesn't make too much sense. So I rather a high quality trade will be if price could break back above this area and then continue higher. Either that, or we could do a fib level retracement based off of this push here from this low to this high. We are in a Fibonacci level retracement now, but I really don't want to take this because this range just looks choppy to trade, right? You'll be looking to trade off of this lower time frame minor level, and then you could have a buy entry somewhere above the range, stop loss below this lows, but look to target this high. Look at this risk to reward, about a 1-to-1, a little bit of 1-to-1. I really want a better risk to reward off of that, to be honest. But this does look high quality because your daily time frame your daily candle will be flipping bullish. We're gonna keep an eye on this. Actually, we're gonna make this our new #1 pair. Let's look at our 5-minute chart because this is where we enter off of. I need to see structure forming here. So looking at our 5-minute structure on this bearish push, we have clear lower lows and lower highs here. Boom. Let's really look at this push here. So our buy wouldn't be until price reclaim this high up here. So potential buys. If we can reclaim this high up here, we may have some buys. And we can have stop loss below these lows. Be able to slow down here for about 7 pips. Let's round it to 10 pips. Okay, 10 pips looks a little bad. Okay, we can do 10 pips actually. But this kills the risk reward, to be honest. So we could do 8 pips maybe. And then you can look to target this for my first target, but a better target, a higher target up here. Then we can use this position up here as the overall scaling. That's a possibility. So we take this position and then scaling above here after our daily time frame flips bullish and breaks its own high. I like this. Can you explain POI, please? POI just means point of interest. So point of interest just basically means areas where you want to see price reach before you even look to take a buy or sell. That doesn't mean buy or sell once price reached there, but that is just to let you know an area where you're looking to actually find your setup. So for me personally, my POI is based off of previous highs and previous lows. So just to give you an example on a blank chart, if I see this kind of structure forming here, price breaks our previous high, I'll wait. My POI will be if price pulls back into this area. Say we get a pullback, I don't buy immediately because we have a pullback. I need to see confirmation first. So inside that pullback, I have an entry criteria where I need to see these things happen in order before I actively press buy, right? But this area will be my point of interest or my area I'm looking to actually take a trade. Price has to reach that area first, and then it has to go over my entry criteria. Me personally, my entry criteria, I need to see on this pullback, I need to see lower lows and lower highs forming. It lets me know that price is slowing down in momentum after a aggressive drop. Once that market structure shifts on that lower time frame, like the 5-minute chart goes from bearish to bullish, and we make a new high on that lower time frame, it lets me know that the bearish momentum is now dying out and it's overall continuing bullish momentum as this level is holding. And that's how I look to enter. Now, with my entry based off of that market structure shift, my stop loss will be below that low down here, and I'll look to target the high. But to answer your question, POI is just an area where you're actively looking to actually take that buy or sell, or you need an area that you need to see price reach before you take a trade. So in this case, this is my POI, right? Price reached this area, but it didn't give me entry yet. Just because you reach the area doesn't mean it gives you an entry. So we reached the POI, just now I need to wait for a potential entry. My potential entry will be if we re-break this high up here. Got it, thank you, no problem. Hopefully I explained that pretty well without too much word salad. So you'll wait until it reaches the POI and keeps going bullish? Yeah, so I needed to pull back into the POI first and then go bullish, just because I know overall I want to take more buys than sells. For the chances of me winning off a buy is a lot higher than it is for me winning off of sells. The way I trade, to put it in perspective, if I was a hustler in New York, right, and I worked in Times Square, and I was a street hustler, and we had a game, right? And inside that game, I had a bag with 3 crayons, right? I showed you what color the crayons are before I put them in the bag, right? I tell you, hey, there's two red crayons and 1 blue. Well, let me switch the colors. It's 2 blue crayons and 1 red crayon, right? And I show you them before I put them in the bag. I throw all the crayons in the bag. I shake the bag up, right? You are the person that's playing this game because you're betting that you pull out the right color crayon. Okay, you know that there's 2 blue and 1 red in the bag. What color crayon do you think you're gonna pull out the bag? The answer is blue. The reason why the answer is blue is because the chances of you pulling out a blue crayon than a red crayon are a lot higher. It's because you know for a fact that there are more blue crayons in the bag at that moment. It doesn't mean you won't pull out a red crayon sometimes, but the chances of you pulling out a blue crayon is a lot higher, just because you know that there are more blue crayons in the bag. Same thing applies to trading. It's a game of probability, right? So if you have more time frames showing you we are making new highs, then you see that are making new lows, then ideally you will want to take buys because it makes more sense. You have more time frame telling you to buy rather than time frame telling you to sell. And that's how I treat my trading. Each crayon represents a different time frame, a major time frame, not really the lower time frames like the 1 minute, 3 minute, not like that. So each crayon represents a daily time frame. Then we have a 4-hour time frame. Then we have a 1-hour time frame. That's how I determine whether I want to buy or sell on the day. Once I establish that, I only look at trades. I only draw up POIs that support that bias. So I'm only looking. So in this case, I'm looking for buys. I'm only looking at bullish POIs. I'm not looking for bearish POIs. Just because it makes more sense to buy rather than to sell. Because at the end of the day, it's a game of probability. And if I have more time for telling me to buy rather than telling me to sell, I'm going to take the buy. Even if I take the buy and lose, at the end of the day, I still want to be on the right side of the market. Being still trading is a game of probability. Only in the market could either go 2 ways, either up or down, right? There's no in between. There is consolidation, but inside that consolidation is still moving either up or down. Understanding that, all you have to do as a trader is be on the right side of the market majority of the time. If you're on the right side of the market majority of the time and you're still losing trades, that just means your entries are off. You have bad timing. So it's easy to learn from your losses when you know why you're losing. If you're on the right side of the market, or you take a buy and you get stopped out first and then it runs up, you just had a bad entry. So you just need to refine your entry, get better entries, and then you'll see your progression as a trader. But being on the right side of the market is 50% of the job. You journal? No, I don't journal no more. I used to journal though. I don't journal no more because only time I journal is when I'm losing. So like if I have a red month, then I'll start journaling just to see why I'm losing. But I don't journal anymore because my system is pretty much set in stone. I've been trading the same way for the past like 3 years. But when I do have a losing month to where I'm net red, then I'll start journaling just to see what I did wrong. Then once I recoup that loss and I build more confidence back, and after I refine why I was losing, then I stop journaling again. I don't really journal unless I'm losing. But I do recommend beginner trader journal. If you don't have a set system in place already, and you like your results are pretty random and stuff like that, you don't have a trading plan, it's important to journal because that's how you develop one. But once I got consistently profitable as a trader, I stopped journaling, and I only journal when I lose, or when I'm on a losing streak, as I should say. You recommend me journaling? I'm barely starting, bro. Just learning about POI and just paper trading. Yes. So as a beginner, you should be journaling because you need to be able to know what you're doing right versus what you're doing wrong, and double down on what you're doing right and weed out what you're doing wrong. That is the importance of journaling. But it's about how you journal. Like if you just journal and never review the journal, then you're not really getting the best out of journaling. So the journal I recommend is called Notion. If you just open your browser, I can show you how to do it right now. Go in your browser and just type in notion.so. This will come up. Back to my content. Because this will come up. You want to create an account and all that other stuff. It's free to use, right? You don't got to pay for it. You create an account and all that stuff. You come here, press add new, and just type build with AI. Type build me a day trading journal for me to track my progress. Make sure you include a notes, a pre-market and post-market section for notes and before and after image for screenshots. That's it. All you have to do. And then let Notion make the journal for you. So that way you don't got to go on Google Sheet and you don't got to actually do the whole thing and watch a YouTube tutorial on how to make a spreadsheet, stuff like that. Just let AI do it for you, doing it using Notion. It will make it, as you can see here, adding P&L, adding pages, adding views, adding properties, creating database, all that kind of stuff. Then I'm gonna show you what it looks like when you're done, or when it's done. So as you can see, it's done. It is add you a trade date, a ticker symbol. A ticker symbol just means what pair you're trading or what asset you're trading. Whether you're trading NASDAQ, US 30, gold, whatever. That's what ticker symbol is for. And it has a section for strategy as well. Based off whatever strategy you trade. If you trade VWAP, then you can have that. If you trade breakouts, it will be breakouts. I trade break and retest. So for strategy, it also have an area to note where your entry, where you exit, and your position size. I mean, how much you risk on that trade. Also, the end result of that trade. Would you green? How much did you lose? How much did you make? The overall P&L, very self-explanatory. Then you have your pre-market notes. This is important. The pre-market notes is the best part of journaling. If you don't have a pre-market notes in your journal, you are not journaling right. The pre-market notes is for you to do a deep dive in your psychology before the trade shows you the end result, before you even win or lose the trade. You need to note that. That way you can use it as a reference after the trade. So this is where you would type, I'm very confident in this trade. This is my bread and butter setup. This is an A+ setup. I really like the setup. This was my confluences. We had a break retest of a 1 hour major key level. We had a pullback retracement, setting up really nice. This is where you type that stuff at. What are you actually thinking in real time, and why are you so confident in the setup? Then after that trade happens and plays out, you go to your post notes, and this is where you add how you feel after the trade. If you win a trade, you would say something like, I would take the setup every time I see it. I want this overall being a solid trade. I was in the trade for a longer time. I could have got a better entry here if I would waited for this candlestick closure or this confirmation, stuff like that. I experienced some drawdown, but I stuck to my plan, thing like that. If you lose this trade, your post notes will look something like, I was disciplined. The setup was there. I didn't rush it. I was really patient, but my entry was a little bit off. I was right about the direction, or I was wrong about the direction, but my entry is a little bit off. Next time, I should wait for this confirmation, or I should wait for this confluence, or I should next thing. And then you review those and see what habits that you have in your pre-market that align with your winning trade versus your losing trades, and with your post-market that align with your winning trades versus your losing trades. This is going over these two is key to journaling. If you're journaling and you're not doing this, are you really making progress? Like, how are you tracking what you're doing wrong versus what you're doing right if you don't have the data? Also, pre-market screenshots. So you should screenshot your before and after. So as soon as you take the trade and press buy or sell, screenshot that price action. paste it here. After the trade, screenshot that price action, paste it here. That way you can have the pre-market screenshot of the before that goes alongside the pre-market notes. Your pre-market notes should align with your pre-market screenshot and what you're explaining. The same thing for your post-trade. Post-trade notes should directly correlate to your post-market screenshots. And yeah, it's a very easy way to journal. You also have, as you changing your strategy and you implementing stuff here, it's going to automatically correlate to this. So you see how many breakout trades you're winning, how many reversal trades you're winning versus losing, how many scalps you're winning versus losing, how many swings, how many momentum trades, how many grab and goes, whatever your strategy is, right? How many VWAP bounces you're taking, how many trades you're taking support resistance, and what's winning and what's losing. And as you can see, what's losing, you just weed out and stop taking those setups, right? If you notice you taking a lot of breakouts and you're getting faked out too much, overall stop taking breakout. And that's how you weed out the bad. Also, you have a calendar view, basically just going to net your show your P&L based off of that day trading. So, in the beginning trader, I do recommend you journal like that. Hopefully that helped anybody. Thank you, appreciate it, no problem. I'm about to take this trade here. I want to wait for this 5-minute closure here the next 1 minute. Then I'm going to actively take these buys. Let's look at our 1 hour. Our 1 hour candlestick just opened. Do we have a bottom wick? If we have no bottom wick, I don't want to take it. Okay, we do have a bottom wick. Okay. Let's wait for 5-minute closure above this high here. Then we can look to take this. This is not financial advice in no shape or no way, shape, or form. This is just me showcasing my perspective of market structure and how I'm approaching the market myself. Of course, do your own research, and I am not responsible for any losses or gains that you take on your own if you were to do what I was doing or replicate my style of trading. Disclaimer. Let's look at GJ, see what GJ is doing. Let's put G over US 30. We're just gonna focus on these two really today. Actually, we're gonna focus on these three: GJ, GU, and AU. Really, I don't really want to look at anything else. Waiting for a 5-minute closure above this high. If I got any pairs or anything like that, y'all want me to break down in the chat? It could be anything. It could be futures. It could be Forex. Doesn't really matter. Let me know. Looks like this trade gonna go without us though if you don't get a 5-minute closure. What time frame you in? This is the 5-minute chart right here. I use the daily 4-hour and 1 hour for direction, and I use the 5-minute for entries. Thanks for the follow, bro. Let me know how long y'all been trading and what y'all be trading. How come? That's a good question. I love that you asked that question. I'm gonna answer it right now in detail. So it's important to note. Let me pause the music real quick so I could talk without getting interrupted. Okay, it's important to note that all of these time frames are in sync, right? Meaning all these time frames is just hours and minutes, right? So all of them work together. In every daily candlestick, you will see 6 4-hour candlesticks. How do I know that? Because 6 times 4 is 24. There's 24 hours in a day. So you know that 6 4-hour candles makes up that one daily candle. And that trickles all the way down, all the way to the 1 minute time frame. Okay. The lower the time frame you go, the more detail you see. So let me go to a blank chart real quick. Let's go to NAS 100 and just pull up a blank NAS 100 chart. Okay. Purple stone. Okay. Let's just mark off the high and the low of this daily candlestick, right? This previous day candlestick. You can see that this is a bullish candlestick. Okay, this is the high, this is the low, this is open and close. Okay, if I go to the 4-hour time frame, you will see. Hold on. Time is this. Okay, it's not going to show me the time, Rick. I want to see the time. Okay, 6. So this was okay. Here we go, right here. 1, 2, 3, 4, 5, 6. Right? 1, 2, 3, 4, 5, 6. 6 candles. That makes up this one daily candle. The lower the time frame you go, the more detail you see. So if I go from the 4-hour, let's say I go from the 4-hour to the 2-hour, right? See the structure here? I go from the 4-hour to, okay, not 4-hour, 2-hour. Let's say I go from the 4-hour to the 3-hour, right? It looks damn near the same, right? You don't see that much more detail. The importance of doing a top-down analysis and going from the higher time frame to the lower time frames is to get more information. You can't get more information if you don't have a gap or a space in between the time frames, because the more candles you see, that means the more detail you're able to see. Getting to see what's going on inside that daily candle. Okay? So once you understand that, this is when you start to space out your time frames. So I use a daily and a 4-hour. Reason being is because these are 2 major time frames, and I get to see 6 extra candlesticks of data for every one daily candle. So now, when I go from the daily time, let's clear the chart. Say I go from the daily time frame now, then I go to the 4-hour time frame. You see, we have this. We get a lot more detail in what's going on inside this price action, right? You get a clear representation of the clear highs and the clear lows, things of that nature. And same thing for the 1-hour time frame. When I go from the 4-hour to the 1-hour, I'm getting to see 3 extra candlesticks of data for every 4-hour candlestick, instead of just going from the 4-hour to the 3-hour. Or the 4-hour to the 2-hour is only 2, right? 3 is like a more significant number, and the 1-hour is a more significant time frame. Okay, so each time frame you go down, you see more candlesticks of what's going on in that specific candle, the high time frame candlesticks, right? All the way down to the 5-minute. Reason why I skipped the 30-minute, I skipped the 15-minute and go to 5-minute, because if I go from the 1-hour to the 30-minute, let's reset chart and let me show you. I go from 1-hour to the 30-minute, it didn't change much. You see? It's not changing much as far as information. But when I go from the 1-hour to the 5-minute, you see it's a lot different. You actually see where your pivot points are. You actually see where your turning points are, where your structure level is, right? And if I just go back to 30-minute, this doesn't look like nothing. It looks like just random lines, right? Look like random lines until you see the detail, and now you okay, this is a support, this is a support, this is a support. So you see the detail of why I put those lines. Okay, so that's why I use those time frames specifically. The lower time frame, the time frames work in sync. The lower time frames you go, the more detail you see, and it's important to space out the time frames. That way, you see more information, and you're not getting like gaslit, whatever. Okay, we didn't get the 5-minute closure that I wanted, but we did get 2 rejections in this area, and I don't like this gap up either. Why is that a random gap here at fucking 216, bro? That gap is crazy. But hopefully that answered your question. Lower the time frame you go, the more detail you see. Exactly. But you also don't want to go with the lower time frames without a clean sense of direction. So I use the high time frame for direction because I am an intraday trader. I hold trades from about 4 hours to about 6-7 hours, right? So because I'm an intraday trader, I want to go for the overall direction. My job as a trader is to predict. Well, my job for the way my style of trading is to predict how the daily time frame candle will close, because I want to be out of the market by time 5 p.m. hit Eastern Standard Time. So if that's my job as a trader, I need to go know how the daily time frame will close and develop a plan based off of that daily time frame close. Okay, so let me give you an example. For this trade I did here, even though it's already planned out and I'm missing out on the setup, but fuck it, it's gonna be more setup to come anyways. So not really big deal. Look at the daily time frame on AUD/USD. Our daily time frame is currently bullish, but before the time before, let me slow down. I'm talking too fast. I don't know if he was here in the beginning, but when I first did my AUD/USD breakdown, I said this candlestick was bearish and it was down here somewhere. Right when I first did it, I said if this daily candlestick could flip bullish, we're probably going to close bullish. And how do I know that? Based off of the lower time frames structure. The lower time frame tell you how the higher time frame will close. So if you anticipate that the daily time frame will close bullish, you must see higher highs and higher lows forming on that 4-hour and 1-hour time frame. If not, it's probably not going to close bullish. If the 4-hour and 1-hour time frame is showing you lower lows and lower highs, it's that daily time frame most likely will close bearish, just because the lower time frame is telling you how the higher times will close. If you see the 1 hour showing higher highs and higher lows, that lets you know that the 4-hour time frame might be closing bullish. If you see the 5-minute creating higher highs and higher lows without taking out a previous low, you know that the 1 hour time frame most likely will close bullish, just because that lower time frame detail is telling you how the higher time frames should be setting up. So I'm trying to predict as a trader. I'm trying to predict, is my daily time frame going to close bullish or bearish? I determine that by looking at the structure. So my daily time frame is overall in bullish structure. I go to the 4-hour time frame then. Next. Okay, my 4-hour time frame, are we making new highs or new lows? 4-hour time frame is making new highs. So because my daily time frame is already making new highs, my 4-hour time frame is already making new highs, I go to my 1-hour time frame as well. Ask myself, are we making new highs, new lows? We are making new highs. It's a no-brainer. I want to take buys. And I'm anticipating that our daily time frame will close bullish. It don't have to close bullish here. It don't have to close bullish here. It don't have to close bullish all the way up here. As long as it closed bullish based off of where I enter at, because this daily candlestick just flipped bullish from having a steep bearish wick, I win the trade. So I'm using the lower time frames to predict the higher time, what direction the higher time frame candles will close, and then I'm taking trades that support that direction based off of levels or major key levels. I am waiting to start trading, but I only have a phone right now. What would be a good app or website? I'm TradingView on the App Store. Go on TradingView and you could see this same information, but it would just look smaller. It would just be on a smaller scale. No problem, bro. Just TradingView to see the details. But if you just started as learning, YouTube University, bro, you can learn anything on YouTube for free. You probably could. Never mind. I can't say that. That's probably TOS. Let me chill. I'm about to say something a little crazy. Liquid Chart Pro. I'm not familiar with that. Can you please look at Velvo? It's basically the XRP of Asia, I believe. Let's look at it. Bro, it's lucky pissed me off watching this trade go without giving me an entry, bro. See, I went for a 5-minute closure above this high here. Our 5-minute closure didn't come until all the way up here. Buying here will be FOMO into the trade because I wanted to get entry down here, and this push already went like, I don't know, 3 pips in profit. So I'm gonna be 3 pips late, still having to keep the same stop loss, which kills my risk to reward potential. Right? So it doesn't make sense to take this trade now because the range is just tighter. If we got a closure down here, I would definitely took this though, but this didn't give me his trade, the closure I wanted. So my next potential entry will be if we could get the break range just above here. You said Velvo. You can live and demo. Velvo, VLVO. I don't recommend trading demo at all, to be honest. All right, let's look at Velvo. Okay, this looks like shit so far, to be honest. Look at the daily time frame on Velvo. We're overall going bearish. We taking out this low down here. You see we have a lower low, lower high, lower low on a daily time frame. So it's overall dropping in price on a daily. So buying now was kind of crazy. Let's go to 4-hour time frame. 4-hour time frame is going bullish though, so that's a good sign. Actually, a 4-hour time frame is going bearish. We created some equal highs right over here. Right after we created these equal highs, we took out a low. So again, we're still dropping in price. So daily is dropping in price, 4-hour dropping in price as well. Going to the 1-hour time frame, we're still dropping in price. 1-hour time frame, you see we have a clear lower low, lower high, lower low, right? Still dropping in price. As far as if you want to trade it, like I would look for sell opportunities based off of projections off of this area, and then you look for price to come down into the bottom of this range all the way down here. The daily and the 4-hour are both dropping in price. 1-hour dropping in price as well. As far as long term, not long term, as far as I'm like buying it and holding it, yeah, long term, I wouldn't want to buy it until we reclaim these highs up here. This is where 1-hour, 4-hour, and daily, all those time frames shift momentum back above this price. All at the exact same time. Literally. They all shift momentum above here. What about the weekly? I don't really reference the weekly, but we could look at it right now. Weekly is again still dropping in price. Looking at our weekly level, we were bullish back here with higher highs and higher lows. Again, price came all the way down and took these lows out right over here. So weekly is even dropping in price. Buying now makes no sense until price at least breaks above these daily levels, 4-hour and 1-hour levels, all above this area. And then you can look to take them buys above here and look to partially out or start to take scale out some of your position as we approach these highs or even these highs up here. But there is a lot of imbalance to fill, and look, being as though you could target all the way up here as well, but don't want to get too greedy. I don't think we're gonna want to risk Brett if he's learning. Yeah, but you could demo trade without demo trading, you know? What I mean by that is the site I use to back test, right? I use this to back test right here. FX replay. FXreplay.com. Sign in. Right. Go to battles, start a battle. A new battle. Casual, next. Okay, let's do it again. Next. Pick whatever pair you want to trade. Let's do NAS 100 just for GP. Let's make it a 100K account just for GP. Max participants 1 because I just wanted to be me. Next, let's make it our profit target 10%. Let's make our max drawdown target 10%. Let's make our max daily drawdown 5%. Max risk per trade 1%, no more than that. And press next. Click create. It's going to put you in a random point and price in NAS 100. Right? This is where you quote unquote demo trade at, right? Instead of using trading view and all that other stuff and having to wait, you get more reps in at a faster pace in this area and learn at the same time based off of how you trade. So I would treat this like my actual trading. And let's delete the volume indicator. As you can see down here, we have a starting account balance, a realized P&L, an unrealized P&L, and it's the random point in price. Same time frames, same indicators, same everything. So let's do it based off how I trade. Daily time frame overall bullish, all-time highs. 4-hour time frame overall bullish. We are making a new high right over here. 1-hour time frame bullish, right? Mark off my levels. This is my current high. This is my previous high. This is my current higher low. Right? I'll be looking for buy opportunities because it makes more sense to buy rather than to sell. And then I will just wait for price to give me a break and retest above this area. Basically, this is how I trade in real time. Right? Let's change this to about 1 hour to see the 1-hour candlestick closures, and then press 1 candle at a time. 1, 2, 3. So I'm looking for a break above this area. Make sure, look at the bottom where it says Tuesday 14. Make sure that is within your session as well before you actually take a trade though. So I trade London session, so I want it to be London session. So this is 17. Let's make sure the time is right actually. Okay, what time is this? Okay, 13. 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. Just coming into pre-London. Let's redo the chart and do a breakdown all over again. Daily time frame, overall bullish. 4-hour time frame, maybe going bearish below this level. 1 hour time frame, bearish, we just took this low. Okay. So we can look to take sells below here. 4 hour time frame, 4 hour and 1 hour are both bearish. I want to take buys. I need price to reclaim these highs. Or we can wait for a pullback into here to take sales. Either one of those. So let's wait until we get one of those things. Okay, we got to pull back up here. Didn't really come steep enough. I need to tap into the level. Didn't quite get there. Didn't quite get there still. Okay, we tapped into the level. Didn't give him a rejection. So we avoided loss here because it failed. Let's continue and wait. Patient, patient, patient. What time of the day is this? 16, 17, 18, 19, 20, 21, 22, 23, 24. Okay, just pre-running again. Patient, patient, just consolidation. Don't really want to trade this consolidation. Let's wait for a breakout. Okay, we got a breakout right over here. What time of the day is this? This is New York session. So I'll be waiting for a pullback into this area. Did we get a pullback? Okay, no real pullback. Okay, there we go. Pullback right over here. What time I did this? This is 11. Go to the 5-minute time frame for entry. We got a 5-minute chart. See a high, 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 low, high, high. I need this low to get taken out. Okay, let's slow it down. Let's make it 5 minutes. Okay, we made a new high. Now I'm looking for this low to get taken out for entry. If it continues higher, we don't get no trade and we'd avoid loss. The same that helped make XRP and XLM is working for Velvo, so I can imagine he will do well long term. You could be right. I'm not too familiar with Velvo though, so I don't want to give you like too much to say on it based off of my opinion. But based off of the price action, I like the levels that I drew up. So this is just consolidation here. So because we waited for rejection off of this area and we didn't get it, we avoided a loss here because this is just consolidation. If I would have just sold here at this POI, I would have got cooked. What time of the day is this? Wednesday, 2 a.m. Let's continue. Let's see if we can reclaim these lows. Let's go back to the hourly. Okay, we never reclaimed these lows. I avoided overall loss here. 1 hour time frame is going back bullish structure. Let's clear the chart and start all over. Daily time frame overall still bullish. 4 hour time frame is now bearish. We took this low. We're just in retracement phase of overall bearish trend. 1 hour time frame is going bullish. So this is contradicting. Now 4 hours bearish, 1 hour bullish, contradicting. I need them to be in sync. So a 4 hour goes bullish above this area, so we can take some buys above here, maybe alongside the 1 hour. Or now 1 hour goes bearish below here. We either take sells below here. Either one of those. Let's see what price does. Okay, we got a breakout above here. What time of the day is this? This is Asian, so we're not trading this. 16, 17, 18, 19, 20, 21, 22, 23, 24. Okay, we're coming into pre-London again. Wait for a pullback. Okay, we got a pullback right over here. Let's go to the 5-minute chart for entry. We're looking at buys at the break of this high here. Let's slow it down. If we don't get a break of that high, we don't get a trade, which is fine. Okay, we're going to look at the buys at the break of this high now. Time of the day is this? Okay, this is Asian session. I don't trade Asian. What? Okay, let's take it just because, just for shits and giggles, even though I don't trade this session. Just to show you how you actually place a trade. When you're doing this, you take your long position, put it on the current price, adjust your stop loss like so, to wherever you want your stop loss is, adjust your targets as well. First target will be this previous high here. Our second target will be about a 1 to 2 risk to reward. Like that, click on it, then you press, damn, I forgot how to do this. Oh, place order. Place order. So now you have my entries up on the screen with my entry, stop loss, and TP. All of that just gets set like this. Press save, and now you see I'm in this position. If I play the candlesticks, you will see my P&L right over here fluctuate, and my my P&L right here fluctuate. Okay. Actually, this is a buy stop, so it didn't get triggered yet. Make it a little bit faster just to get it over with. The buy stop never got triggered. Delete the buy stop, delete the position, whatever. Continue. One more time, what it is this? Sunday. It's pre-market. We're not trading that. Let's go back to Monday. What time of the day is this? Wait, what you want me to explain? Can you explain bullish and bearish? Okay, I'll do that in a second. Bullish and bearish is determined based off of if you're making new highs and new lows. It's very simple, right? don't look at the overall candlestick individually. Look at the overall structure the candlesticks are making. If you see a market that is overall making a new high, meaning where current price goes above the previous high and makes a new higher point in price, that is a bullish market. You see a series of new highs being made, and vice versa. If you see something like this is a bearish market. And it's important to note that in order for a bullish market to turn bearish, price has to break the previous low that created that new high. I'll say that again. In order for price to go from a bullish market to a bearish market, price has to first break the previous low that made that new high. So if this is the structure we have here, right? This is my lowest point before making a new high. The reason how I know that, because this is the lowest point before breaking above this high, means though this is my previous high, right? In order for price to go bearish or to be bearish, price has to then come take out this low. If price never comes take out this low and it does this for I don't know how long, right? This is still bullish because price never took out the low that made a new high. This structure would just be internal structure, internal bearish structure, meaning inside the overall bullish trend. Or would I say this is the 4-hour time frame? Inside this 4-hour time frame bullish structure, you have 1 hour bearish structure, meaning we're making new lows on a 1 hour time frame internally of overall bullish trend. It's important to note that. It's important to know the difference between a structure shift and an internal structure. This is not the 4-hour time frame going bearish. This is just letting you know that the 4-hour time frame is bullish, but we have a internal structure bearish, letting you know that the 4 hours the 4 hour is in a retracement phase. Okay. So whenever you see a bullish market like this, we have price making a new high. In order for price to go bearish, it needs to take out this low first. So say price does something like this, boom. Now you have a bearish market. And this is how the chart patterns work. This is how you see head and shoulders and inverted head and shoulders and equal highs, equal lows. All that stuff is just fancy names for the market shifting direction. Literally, this is literally just a fucking head and shoulder pattern. But at the same time, only thing happened was price took out the previous low, right? Even if I do it like this, to where I just like this is still a head and shoulders pattern. But even though it's a head and shoulders, all price did was take out the previous low. But they say a head and shoulders or equal heights, all that stuff to just sound fancy and shit. In reality, it's just the market giving you a shift in direction, going from bullish to bearish. That's it. A reversal pattern. Okay. So when you going over identifying when a market shift from bullish to bearish, it's important to note that it doesn't happen until price take out the previous low that made that high, or vice versa for bearish, take out the previous high that made that low. Okay. So let's say bullish, and then we go bearish here. And then above here is when we go bullish again. And then below here is when we go bearish again. Now it might go bearish for even longer. Whatever. Okay, the time ran out. Okay, let's do it again. Like actually, let's do it again at like really this time. Like podium. Let's start a new battle, exit battles, new battle. Let's make it 100K count like I did before. Let's change the time. That's why the time ran out. I did it too fast. Let's do it for 90 minutes. Okay. Free counts have a 10-minute limit. Wow, bro. Can I do 60? No, I literally don't do 2 minutes. That sucks. Max one participant. Let's do gold this time. Let's do EU. Something simple. EUR USD. Okay, boom. Next, profit target 10%. Max drawdown 10%. Max daily drawdown 5%, 1% per trade. And next, create. Boom. Let's do the same thing I did before. Daily time frame. Didn't mean to do that. Let's delete that. Daily time frame overall bearish. How do I know? It's because price is making new lows. We took out all of these lows to the left hand side right over here. Okay, overall bearish on the daily time frame. 4-hour time frame overall bullish. How do I know? Because we are making a new high above this area here. 1 hour time frame, bullish as well. same exact high, right? So I wanted to take buys. Looking for buys, we have our current high, our previous high, current high or low. Very simple. Let's go to the 1 hour. Let's make sure we are in the right time zone. New York. This is New York pre-London. I mean, this is pre-London. 1 hour candlestick. We're waiting for bullish buys above these highs up here. That's ideally what I'm waiting for. Let's see if price ever break above this high and close. I need an hourly close above the high. Okay, hourly close above the high. Wait for a retest. We got a retest right over here. Drop down to the 5-minute time frame. Look at the 5-minute time frame, and let's play about 15 minutes intervals. 15 minutes. Okay, we reclaim the low. 5 minutes now bearish. I needed to go bullish though, so me to take a buy. Okay, if it never goes bullish, we never get a trade. It overall is going up or down. 1 hour just shift bearish. We got our 4 hour time frame, a 4 hour shifting bearish below this level. So we could take some sells below here. Sorry, I'm talking too fast. I'm just trying to speed run. Okay, we go bearish below here on the 1 hour time frame. We got our break. Give us a retest. Go to a 5-minute chart for a entry. Let's go sell stop at the break of this low. Stop loss above these highs. Then go to 1 hour time frame with targets. We can look to target the bottom of this range. Let's go place order and save. So we got a sell stop at the break of this low and see how the trade plays out. If it gets triggered or not. So far we didn't get triggered. Okay, if it gets triggered now, I gotta adjust the stop loss. The stop loss doesn't make sense now. My stop loss has to be above this high. I gotta adjust it to these highs here. And actually, let's delete the whole position and redo it. Stop loss above this high. Now we place it. Save. Okay, boom. Let's see if we get triggered. Okay, that had to be some fucking news. Because look at that fucking candle. That was news. Okay, whatever. Continue. Now we continue bearish. Let's get this trade a second chance. All right, second chance trade. Sell opportunity again. Same exact thing because we got stopped out because of news. Place trade, order, save, speed run. We in some profit, up about $800. Looking to target these lows down here, like I said before. We're very close to TP. Let's bring stop to break even. Let's hold the rest of this trade. Okay, let's take some partials off here. We look like we're having some kind of rejection. We're gonna close 50% of our trade, stop at break even, and let's see what the rest happens. So this level look like it's holding right here. Okay, we got mitigated at break even after getting a small win. We literally just got edged, like barely. But whatever. But this is what I would use to back test, not necessarily demo trade. So as a new trader, I will do my practice in here, not necessarily demo trade. That was the point of me showing y'all this though. I don't really want to do this anymore. Do y'all think do y'all still want to see me like do this or what? Because the actual markets don't look pretty good. We missed this trade over here. Our next entry will be possibly up here. Look at everything else. Okay, we went for an hourly closure on GU, but this candlestick has no bottom wick. I don't really want to trade off of that, to be honest. Hey, why is this so big? There we go. This is better. Wait for this hourly candlestick on GU and GJ. Not really near our entry. So appreciate that, bro. No problem. Because you like with demo trading, like you gotta wait for the candlestick to close. You gotta wait for the setup to play out. I mean, to set up for stuff, you gotta wait for a session and stuff like that. You can fast track all of that shit just by clicking through the candlestick, like literally. Well, if I'm waiting for a session and it's not my session at the time, say this is New York session, say I trade only London, look at the bottom right where it says Monday 10 a.m. All I do is just keep pressing this until I get to the next day. Then I get more reps based off trading my strategy. What is your bias on gold for this week? What levels do you expect to see? Yeah, I got you. Gold. So gold, I want to see gold continue higher, but it's tricky trading gold because we are at all-time highs. Based off of today alone though, our weekly is bullish, aggressively bullish. Our daily is aggressively bullish as well. Our 4 hour is aggressively bullish, but our 4 hour looks like we're slowing down a little bit. We had an aggressive push up, we had a slow down in consolidation, and then we had another impulse up, right? I want to see some of this impulse get filled in a little bit to see if price can pull back into this 3,650 area, then I could be looking to take some buys off of this area again. If price can hold this level. If it doesn't hold this level, you potentially could have some sells below 3,620. And then looking at this left hand side, we have clean imbalances to fill to have a big ass trade, possibly down here. Either down here or target here or target here. But this is a lot of imbalance that needs to get filled in at some point in time. Again, the market, even though we are at all-time highs, it's not going to continue up forever. Even down here is not even the 50% retracement of this overall aggressive push. This overall push started all the way down here in August. We're now in September with no decent enough retracement to fill in this imbalance, right? We all know the market's not going to go up forever. It's going to fill in some of this, at least some of this at some point in time. So I'll wait for a decent pullback to take a trend continuation. The levels I expect to hold is I expect this level right here to hold to take continuation buys. But if this level doesn't hold and price gives you a deeper retracement, I'll look to take some sells below this area then to try to catch some of this retracement. When you say take out high or low, which high or low do you pick? The one that's closest to the current price. What time it would take to imbalance fill? I don't know. I don't see the future, bro. I just go off of based off of what the candlesticks are showing me. And I can't tell you, I don't know how big those candlesticks are going to be. I don't know how news is going to affect price. I don't know if we're going to have, I don't know. I don't know how much volumes are going to be in the markets during those, but in the future dates. So however long it takes is how long it takes. How long have you been consistently profitable? 2 years. 2.5 years, almost 3 years, actually. At the end of this year will be 3 years. How much for personal lessons? I don't do personal lessons. Well, actually I do, but I don't charge for them. I do them in my Discord for free. If you want to join my Discord, just send me a message on TikTok. I'll send you my free Discord link. I haven't been doing them recently though. I need to get back into them. I used to live trade every day, but I stopped live trading every day for the past 2 weeks because I have another aspect of business that I was running outside of trading that I put a lot of stuff into, a lot of time into recently. That's pretty new. You talk so fast, yo. I know, bro. My bad, bro. I'm gonna try to slow down. I got you. I'm gonna slow down right now. But before we get into, I'm gonna answer that question about the highs and lows. Right. Before we get into that, if you want a personal lesson from me, like a one-on-one mentorship, whatever, not really one-on-one mentorship, like one-on-one live call with me. I do them once a week on a weekend. So based off of in my Discord. So in the Discord, in the general chat room, I will type in the chat like, yo, I will do a poll like this. Who wants one-on-one free session? Then you just vote and I'll pick somebody random from the poll. Right? And you see here every Saturday. So I just started them relatively recently. So want free sessions from me, just message me on TikTok. I will send you the link to my Discord. And on the weekend, I will post a poll for when I'm doing free session. And you just let me know. Just vote and I'll pick somebody at random, to be honest. What's your average percent profit per month over those 2 years? 5%. Can you repeat the important stuff, please? What session do you trade the most? I trade London session the most. Thanks for all the roses, bro. I trade London session the most. I am an intraday trader, so I try to catch the whole move of the day, not really the move of the session. So I only take pro-trend trades for the most part, and I want to catch the overall move. My job as a trader, based off the way I trade, is to try to predict how the daily candlestick will close. I use the lower time frame to use the lower time frame direction. Well, I use the higher time frame direction with the lower time frame entries to determine how the higher time frames with like the daily will close. No, I trade my own strategy. I made it myself over my 4.5 years of trading. So the session I trade the most is London session, but I take 1 to 2 trades a day. If I wait all London session and I don't get a trade, I will be open to trading New York. So I will trade New York session if I don't trade London session. If I do trade London session and I get a win, I don't trade New York session because I already won. I don't need to trade New York session. If I take a loss during London session, I will be open to taking a second trade to recover my loss and try to end the day in the green. If I lose that trade, second trade, I will be done completely. So if I trade London, then I don't need to trade in New York. If I don't trade London, then I will be open to trade in New York. If I take a loss through London, I will recover it through New York. But that's it. Do you have any rules list for your trading sessions? Is it strictly rule-based? Yeah, my strategy is strictly rule-based. I need to see everything happen in order, in sequence of events. If it doesn't happen in order, then I don't do it. So again, everything is in my Discord community. So if you want to join, send me a message on TikTok and I will send you a link to my Discord for free, right? But based off my strategy, if you go to my Discord community and go down here to strategy talk, you will see in writing everything that I look for. So I'm going to read it to you and I will give you an example as well on the charts. So first, I determine the direction of bias using the higher time frames. I start by analyzing structure on the 4-hour and daily time frames to establish a clear direction of bias, bullish or bearish. That's what I'm thinking about. Identify my key levels on the 1-hour time frame. Once the bias is set, I drop down to the 1-hour time frame and mark out key levels where you expect price to react in alignment with your bias. I use support and resistance to try to keep things simple. I wait for price action. I wait for price. Let me slow down. I wait for a price reaction and confirmation on that 1-hour time frame. I do that by waiting for price to reach one of my marked levels and observe how it reacts. Is it being aggressive? Is it slowing down? Is it breaking through? Those are the stuff I'm asking myself. I look for a strong 1-hour candle close that confirms my direction of bias. So I need strong 1-hour candles that close bullish if I'm looking for bias, strong 1-hour candles that stick to close bearish if I'm looking for sales. Based off of here, right? For bias, close above the level. For sales, close below the level. I refine my entry because I don't just entry right after close. Then I refine the entry. So I go drop down to the 5-minute time frame just to get an idea on what the 5-minute time frame looks like. To be more precise on how the higher time frames will go, right? I need my 5-minute time frame to align with my overall bias. Once you have a confirming 1-hour close, drop down to the 5-minute time frame. I'll wait for a pullback and a retest of that level that maintains structure. I like to look for a market structure shift or an MSS or a CHOC, depending on your level of understanding. CHOCH is just a change of character. A lot of ICT traders, you say it like this. I don't say it like this. I say MSS, meaning a market structure shift. So I look for a market structure shift, a break of a key level highs, a key lower high for longs, or a key higher low for shorts, signaling a shift in intraday structure aligned with your higher time frame bias. Enter pro trend. Execute the trade in the direction of my original bias using the lower time frame confirmation for a refined entry and stop loss. So when I say I needed everything to happen in order, I need all of this to happen in order before I press buy or sell. Do you have any, I answer that question. Do you have a paid services or is everything completely free, bro? I don't have any paid services. I do everything for free. I make money off of trading and I have other avenues of business that I'm working on. Well, two other sources of income outside of trading that I'm hands-on with. So I don't really need to sell you anything, to be honest. The reason why I live stream or I like do educational trading content is for entertainment, because trading by yourself is boring, right? If I don't have nobody to talk to, I'm just sitting here looking at a bunch of candlesticks all day. It's really boring. And when I'm explaining the stuff I do, it drills it into my own head. And it makes me more disciplined as a trader. So not only is me explaining it helping y'all, it's helping me as well, because I can't just explain something and then do the complete opposite, because that challenges my integrity as a person. So I teach completely for free. At the moment, I don't really sell anything. I don't have to sell anything. I don't really care. I make money off of trading, so whatever. Do you trade your own capital or use only prop firms? Both. I trade my own capital and prop firms. When I trade prop firms, I target 5% a month, risking 1% per trade. And when I use my personal capital, I target 25% a month, risking 5% per trade. With your retest, do you look for a wick or a close? So I'm gonna give you an example right here. Okay, say I'm looking to trade this break and retest, right? So price break above this previous high, I'm waiting for price to retest this high, right? Say price pulls back on this 1-hour time frame, right? Inside this 1-hour pullback, I need to see this happening. on a 5-minute chart. So I need to see this structure happen on a 5-minute chart, but it may look like this on a 1 hour time frame. So on the 5-minute chart, I need to see this. I don't care if it closes below. It doesn't matter to me, right? I just need to retest to pull back into this area and have structure. If the pullback has structure and pull back into this area, my entry will be based off of one of these lower highs getting taken out. So the one that's most recent to current price. So in this case, it will be this lower high. If price comes up, doesn't give me an entry, and comes down and re-breaks low, I just simply trail my entry to give me a better entry and put it here. And then say price does it again, I'll trail my entry and put it here. If price ends up coming below this area and then my entry will be below this level, I wouldn't take that anymore because now it looks like this is a overall being a fake out, meaning the retest is failing, and now we're coming down to take out this low instead. So that's how I trade my break and retest. I don't need it to reject the area with a wick specifically. I don't need it to close below it either. Like I'm just basically focused on that 5-minute time frame and seeing how those structure points are hitting. Then I would take a buy after my most recent lower high get taken out after tapping into the level, right? So to clear up some gray area as well, if we see something like this, right? Price comes close to my level and then takes the high, I'm not taking this. The reason being is because it never tapped into the level. Like I said before, once I have my POI, I need price to tap there. If it doesn't, I don't care how close it gets, it can miss it by 1 pip. If it doesn't get there, I don't take it. But if once it taps into my level, and then I look at these areas for entries. If it doesn't tap, I don't take it. But say it finally taps into the level, creates that lower high, then that lower high right over here gets taken out. I will enter with a buy stop at the break of that high. Stop loss below the low. Then I'll look to target previous highs, like so. If you wanted like a live representation, okay, we can put it up right now. So this was the break and retest. I went down to the 5-minute chart after seeing the retest. I see we have a higher high, low, a higher high. I waited for this low to get taken out for me to take the sell. Stop loss above the high, and I target the new low. Basically. And then this is how the trade played out. So I'm not really looking for the rejection or like a rejection wick or closure or anything like that. I'm literally just looking at the structure in that 5-minute chart. In this trade, I was throwing some drawdown over here, but as long as we stay below this high where my stop loss is, I'm pretty much holding my trades. Then I look to target the bottom of the range, so on and so forth. After the higher high, how did you know it will reverse down? I didn't. I don't know it was going to reverse down until it does it. But okay, let me pull it back. Let me pull the video back up actually. Okay, first thing I said is looking at our daily time frame, we're overall bearish. So that lets me know that I want to take sales. Okay, we created some equal highs here. We took out these lows. Again, I want to take sales. We had a break, a retest, and a continuation. I'm looking for the same exact thing to happen over and over again. A break, a retest, and a continuation. It already happened up here. I'm just anticipating that it's going to happen again. I said daily time frame telling me to sell, the 4 hour time frame telling me to sell. So I have 2 time frames telling me to sell. Now this is the 1 hour time frame. A break, retest, continuation. I'm expecting the same thing. Break, retest, continuation. This was my 1 hour previous low. We have a lower low, lower high, a new low. So now I'm looking at it like we're making a new low below this level. So I'm anticipating that our new low is going to be a little bit deeper than what it's already at. Then we get to the 5 minute time frame where our 5 minute time frame was bullish. How I know it's bullish? Because we took out this high right over here. Watch. So I said I wanted to see price take this high first. So price took this high right over here. How would I know that? Because these highs are higher than these highs. This is where the 5 minute decided to go bullish. Once it went bullish, I then marked off the structure, looking at the higher highs and higher lows after it went bullish. So I see higher high, higher low, higher high. Before I even seen all of this, this is what I seen: higher high, higher low, higher high. Once I seen this higher high, I just simply said, if we take out this low, I'm going to sell. Because, like I said before, the daily was bearish, 4 hour was bearish, 1 hour was making a new low. It only makes sense to take sells if our 5 minute goes bearish after going bullish. So we just went bullish, now we're going bearish again. So I waited for price to retake the low that created a new high. So this was the lowest point that created the new high above this high here. And then price put me in some drawdown and then eventually went my direction. So this is the low I was looking at the target. I said, I don't think this low is going to get broken. So I'm going to take full out at a 1 to 2 risk reward. And then, well enough, price came down, tapped that low, and it started to reverse. Gold is going crazy right now, new all-time highs, not for real. So the higher high was a retracement in the overall downtrend. Yes, the higher high was a retracement in the overall downtrend. Yes, there you go. You got it. Here's another example here. So this is another trade I took on live here, right? I wanted to take a break and retest buy above here. Got a break, now we got our retest. Before I took the retest, I said I wanted to see this low get taken out. So if we take out this low, tap into the level, and then reclaim these highs, because this is the highest point before making a new low, then I'm open to taking this buy. And this is the 1 hour time frame, already being bullish. As you can see, we have a structure shift here where we went from lower low, lower high, lower low, to a new higher high, higher low, higher high, higher low, higher high. This is a break and a retest of this previous high. So our 1 hour is already bullish. I'm just anticipating that our 5 minutes is going to go bullish alongside my 1 hour. Looking at our 4 hour time frame, we're bullish. How I don't know? Higher high, higher low, higher high, higher low. I'm anticipating that price could just continue up to at least retest these previous highs. And then that's how the trade played out. It gave me the break and retest. This was the low I anticipated price to get took. Price took the low, eventually came up to take the high. I took my buy entry, stop loss below the low. Now I look to target the highs, and that's how the trade played out. So it had to take out the low that created the high. Yes. That's why when somebody asked earlier, do I like my strategy is rules based? Yes, rules. I need everything to happen in order. I need the price to take out a low that taps into the level, and then I enter based off of the high that get taken out. But then I enter off that high. I enter off the high that. Okay, let me slow down. First, I need to see price take out a low that taps into my POI. After that happens, I look at the high that created that low, and I use that high as an entry. There we go. That was a better way to put it. I'm in a long position right now. What do you think? Where should I fully close my position on gold? Let's see. So I do like your position because I'm looking at gold longs as well, just not yet. it's tricky trading all-time highs. I can't tell you exactly where to take partials. I'm gonna take the profit off because there is no price action to the left to refer off of. There is no potential rejection areas that price can potentially reject off of because price never been this high before. So there is no market structure I could tell you that say, okay, price might reject here. So to be honest, when I trade all-time highs, I just close at a 1-to-1. Keep it a beam. Keep it at 100. Whenever I get up a 1-to-1, I'll just take partials off or full because there is no price action to even base your data off of. Like, there's nothing looking to the left. But I do like these buys. I'm waiting for buys here as well. I'm just waiting for price to pull back into this area. So we already got our break. Now I'm just looking for a retest on this 5-minute chart. No, I just use risk to reward when it comes to all-time highs. Literally. I catch him perfectly with a 1-to-7. Yeah, you're a sniper. POI is highs or lows? No. I don't trade fair value gaps or stuff like that. Like I don't trade ICT or SMC. I trade based off of pure highs and high low. Bro, when I tell you the way I trade is so easy, it's literally so easy. I think I have the easiest trading strategy for anybody to learn. Reason being is when I come to the chart, let's go to something different that I didn't do yet. Okay, Euro USD. When I come to the chart, I establish bias. Rather, I want to buy or sell. Once I had that bias set, I literally go to the 1-hour chart, and this is how I find my levels. I ask myself, where's my current high? Based off of current price. This is my current high. Where's my previous high? So I'm looking, higher high, higher low, higher high. Ask myself, where's my previous high? This is my previous high. Where's my current higher low? This is my current higher low. And this is my levels, literally. That's it. Then when I look for my break and retest, I'm either waiting for a price to break my current high and then retest it, like so. Break my previous high, retest it, meaning it already broke the previous high, so I'm just waiting for a retest of previous high to continue up. And then I mark off my most recent higher low for reversals. Not to take buys, but to take the reversal. Literally. So my POIs is always at a previous high or current high. Why do I pick this? Are you asking why do I pick this low instead of this one? Because every support resistance has potential to reject off of. So if I trade off of this one, like if I sell below this one, I would have to worry about price rejecting here, which is killing my risk to reward, right? This will be my first TP. It's only 6 pips, right? Also, I might not even get entry here. Like price may even close somewhat like this. Right. Okay. I can't get it right, bro. But say it's probably candlestick close right here. I'm not even getting this entry. I'm getting the entry all the way down here based off the closure. For like reversal or whatever. Dramatically changing my risk reward. This is a weaker confirmation. So instead of selling below here right into this level, I could sell below here instead. And then now I have this range to trade based off my next area of rejection instead of this area. See? So it makes more sense to just wait a little bit longer, 5 more pips, just to catch this 30 pip range instead of trying to trade this 5 pip range. Anything you see here to the right hand side is what I trade. Hopefully that made sense, Fancy Nancy. But yeah, I'll use this level instead of this one just because this is the cleaner, has the cleaner range looking to the left. Versus selling below here, I'll be selling right into this level. The risk reward looks better right over here. and it looks a more high, like higher probable. Mm, mm. Oh, you probably can't see because my face came in the way. But anything you see here is what I trade. All of these stuff here. I used to just trade 1 to 2 pairs, but I stopped doing that because I found myself taking low quality trades because I would expect that to be the trade of the day. As I matured as a trader, I learned to focus on the quality of the trade and not the trade of the day. So sometimes for my session, like London session, price might be in a retracement phase, meaning anything I take will be counter trend to the overall time frame. But I found myself taking those retracement trades instead of waiting for the retracement to be done to take the overall pro trend trades. So to stop myself from taking counter trend trades, I added more pairs to my watch list. Like if it isn't pro trend, I just trade something different. That way I focus on the quality of each individual trade, not necessarily being in the trade because that's the only thing that I trade. Please, can you check Euro USD? This is Euro USD right here. Let's do a top-down analysis for your Euro USD. Looking on a daily time frame, we're overall bullish. How do I know we're bullish? Because if I just look at this, we have a higher high, higher low, higher high, higher low, higher high, higher low, higher high. All right, if I move this overall line and you just see this price action, looks clearly bullish. Okay. To make it a little bit simpler, how do I know we're bullish once again? Because price has made a new high above this high. Very simple. Daily time frame is bullish. Then I go to a 4-hour time frame. I'll do the same exact thing. Are we bullish or bearish? Okay, we were bearish here because the price took this higher low. Then we have a lower low, lower high, lower low. Then we took this high. This is where the 4-hour went bullish. Now you see we have higher high, higher low, higher high, higher low, higher high. Very simple. So 4-hour is bullish as well. So daily is bullish, 4 hours bullish. Now we go to the 1-hour time frame. Same exact thing. I do the same exact thing. That's it. We're bullish. How do I know? Higher high, higher low, higher high, higher low, higher high. Once I get here, daily is bullish, 4 hours bullish, 1 hour is bullish. Overall, I want to buy rather more than I want to sell. Just because I have more time for telling me to buy rather than telling me to sell. Very self-explanatory. Once I get here, I'm in my head like, okay, where's my current high? Let's mark it off. Where's my previous high? Let's mark it off. Where's my current higher low? Let's mark it off. Okay. This is my current high. Let's mark it off from wick to body. Break and retest the body above this area. Previous high, break and retest above this area. Wick to body. Current low. Boom. Now we have potential bodies above this area. Potential bodies if we pull back into this area. And reversal trades below this area. Now looking at this reversal, this is where the 1 hour goes bearish. Go back to the 4 hour. 4 hour is still bullish above this area. So I would change this solid line to a dotted line. Let me know that this 1 hour, that this reversal trade is counter trend to the 4 hour time frame. It's pro trend to the 1 hour, but it's counter trend to the 4 hour and the daily. Then I will mark off another 4 hour level based off of this position down here, because this is where the 4 hour goes bearish. This is my most recent high. And this is my most recent low before making a new high. So this is where the full reversal happens, where the 4 hour will be bearish and the 1 hour will be bearish, both below this level. So I'll make this a more solid line to let me know that this is a higher quality trade than this one. So if I do take this reversal right over here, scale down my risk because this is a risky trade, because this is counter trend. The pro trend reversal is not until we come down here. And then boom, this is how my chart looks. Buys above here, buys here, risky sells here, clean sells here. And if I take these risky sells, I can look to target this low. If I take these clean sells, I can look to target this low. If I take these buys, I get to target this high. If I take these buys, I get to target this high. That's pretty much it. What is your average number of trades you open per week? And what is the average time you hold your trades? So all my trades from roughly 4 to 4 to 7 hours for this whole time. And as far as how many trades I take a week, I take 1 to 2 trades per day. I take 1 to 2 trades per day. Max loss, I lose 3 trades a week. I don't lose more than 3 trades a week because I cut my week short at 3 losses. The reason being is I use that as a risk management. Okay, wait. Let's lock in on gold real quick because we giving us a pullback. I kept my loss out at 3 losses a week. Reason being, if I was 1% per trade, let's say worst case scenario, I lose 3 trades. I lose 2 trades Monday and 1 trade Tuesday. I don't trade Wednesday, Thursday, and Friday. I come back the next week. It's easy to recover 3% loss, right? And while I'm waiting for that next week to come, price is still moving. Price action is still happening while I'm taking my little break, not trading. And by the time I come back that following week, it will be in a whole new area of price action. We won't be in the same range. We have new ranges, new highs, new lows, new consolidation, things of that nature. Okay. And it's easy to cover 3%. I don't want to keep taking repeated losses in the same price action during the same week. And then now, next thing you know, I'm getting faked out 3, 4, 5 times in the same week. Now I'm down 5%. Now I got to spend the whole next week trying to recover 5%. That's kind of crazy. So worst case scenario, I lose 3 trades in a row to start the week. I don't trade for the rest of the week, and I come back the next week in a newfound price action with new cleaner levels. And it's easy to recover 3% in a single week. What is my risk reward on your trades? Usually 1 to 2. So you don't ever hold trades overnight? No, not really. Can you put long and short position tool on your chart, please? Put it where? I'm not actually in the trade. I'll put it once I get in the trade, but I'm not in the trade right now. So yeah, I'm really big on risk management. I think my risk management plan and my risk management strategy is what makes me profitable, not the way I trade, to be honest. The fact that I'm so disciplined on how much I allow myself to lose is what keeps me in the game. How much was your worst drawdown? I don't think in money. I think in percentage. So I'm trying to think of how to answer that question. You want the answer based off of as I become profitable or in my whole 4.5 years of trading? You want in my whole since profitable? Okay, 1%. Yeah, I'm lying, 2%. In the past 2 years, I haven't risked over 2% a trade. So my worst drawdown was 2% because that's stop loss. Put the long and short position on your USD. You were just on where the 4 hour is opposite to the 1 hour. Yeah, I'm not actually in the trade though. Like, where do you want me to put it at? You want me to show you where I would enter at? Like, as far as putting it on the screen? Have you ever experienced like 3 or 4% losing trade streak? Oh, yeah. Oh, so you mean deeper drawdown in like percentage basis? Or not just one single trade? I thought you were talking about one single trade. Okay, percentage basis, deepest drawdown. I've been 6% in drawdown in a single month. That was this year too. Yeah, so this year the deepest drawdown I was in was 6%, and that was in June. Not June. Actually, it was June. Yeah, I'm big on risk management, bro. So my drawdown don't be like deep drawdown. I think every year I get cooked. I think no, it wasn't June. It was April. I'm lying. It was April. I got cooked in April. I think April I'm lost 6%. Then May I was up 15%. But 15% minus the 6% I recovered from June, I only netted like 11% profit. because I lost the previous month before that. Do you always risk the same percentage per trade, or do you risk like 1% per trade or less? So I always risk 1% per trade. Sometimes 2% depending on how my week is going. I've blown 12 prop accounts. I don't understand manipulation and stop hunts. I think that's false. I think that's not a real thing. I think that's only a real thing when it comes to the people that trade ICT and stuff like that. But I don't. If you're getting manipulated, when your stop loss is getting hit before you take profit get hit, that just means your stop loss was too tight. That's all that means. It's not you getting manipulated or you getting stop hunted. Your stop loss was just too tight. It's simple as that. You just got to get better at your stop loss placement. And 12 prop accounts, that's light. That's it? You only blew 12? Or do you place your stop loss? I'll place, okay. The logic behind my stop loss is I place my stop loss in areas that invalidate my bias. So if I'm bullish bias, I place my stop loss where I think sellers are regaining control after I enter. If I'm bearish bias, I place my stop loss where I think buyers are regaining control after I buy. After I sell. Okay. So basically, that's always above a previous high on a sell or below a previous low on a buy. So I'm gonna give you an example of trade I was taking. So this was a buy I was in. Instead of having my stop loss right below this current candle that I'm entering on, my stop loss below the overall low, because this is what I'm anticipating, that this is where sellers regain control on this buy. Wait, damn, I can't rewind it, bro. Oh, yeah, I could. Okay, look at this position here. I'm looking at this break, retest. I'm anticipating a continuation. Below this low is not just this candle low. This is the overall low of the whole pivot point that I'm looking at. So in my head, I'm thinking like, okay, this is below this area. If we come down here in price, we're probably going to fill back in the rest of this range and come all the way down here because this is our next rejection area. And this is clean candles to the left hand to fill in this imbalance. So that lets me know if price does take this low here, I'm probably wrong about my bullish bias and sellers are regaining control. And at that point, I don't want to be in the trade anymore. That's how I think. And then boom. This trade was some gas. I remember this trade. This trade was some gas. But that's how I play stop loss at an area that I think invalidates my trade. Same thing with this trade here, right? As you can see, we overall had a break, a retest. I enter on this retest, I took a sell. Stop loss, instead of using stop loss above this wick here or these highs here, or a stop loss right above the range. This was the overall high of the point that started this bearish push. So I was anticipating that if price could stay below this area, sellers will regain control. If we go above this area, buyers will be in control. If buyers are in control, I don't want to be in sales no more. So I would rather get taken out above here than to get taken out right here. If you're getting stopped out because your stop loss is too tight, it just simply means that your trade idea was still valid, but it took you out first because you were just too tight. That doesn't mean your bias was wrong. Like if you're in a sell, you get taken out before it continues to sell. That just means sellers were still in control, but your stop loss was just way too close to entry. Like, say I enter right here and I had stop loss right above this wick. I would have damn near got stopped out right here on this one candle. But instead, I'm using this overall whole high as a stop loss and not just that one given candle. I try to focus on the overall structure of all the candlesticks itself, not just each individual candle. I remember this trade as well. I took a position up here and I got the scaling right over here as well. Took this on live over the same trade. And then look at this stop loss. Like, this was a break, a retest. I took the retest sell. Again, stop loss above the overall high that I think sellers are in control. I think buyers regain control if we take this high. So that's where I place my stop loss. Not necessarily just right above the wick or right above the wick or whatever. What time does London start? London start for me at 3 a.m. 3 a.m. EST. It's 3:30 right now. Almost 3:30. So London started about 30 minutes ago. Oh. I appreciate all the engagement today, though. We got a lot of engagement. What pairs are you trading now? I focus on the quality of the pairs and not just taking any given setup. So all the pairs you see to the right-hand side right over here is the pairs I trade. When I come to the market and I break down my pairs, I've bookmarked what I think is the highest quality, then I ignore everything else. As you can see, I did breakdowns on everything, almost everything. Myself could swear I did breakdowns on all of these. Yeah, so I did breakdowns on everything. And then I'm only focusing on what what's about to happen. And then I only focus on the high quality ones. So these are my top 3 for today. So these are the only ones I'm watching during this session. I'm gonna stay here for about 5 more minutes and I'm gonna get off though. I'm tired. Bro, you talk fast, but this is quality info, gems. Bro, I'll be trying, bro. You just gotta catch me when I'm talking fast and just let me know and I will slow it down for you. But I definitely talk fast. Everybody tell me I talk fast, even in real life. But yeah. I try to be that person when it comes to trading that I wish I had when I was coming up as a trader. Like, I don't gatekeep nothing. Everything I know as a trader, everything I've learned, send me a message on TikTok, I'll send you the link. Everything I learned as a trader, like, I don't gatekeep. Like, I'm not gonna tell you, I don't sell anything, so I'm not gonna tell you, go buy something from me to learn this information or for me to tell you or explain something to you. Right? So I don't gatekeep nothing. Anything I know or my opinion about any other strategies, I would just give it to you. Like, I don't really care. And I try to keep stuff short. Not really short, because I'll be over explaining shit all the time. I'm not gonna say short. But I try to keep stuff like simple as possible. Like, I'm trying to make stuff overcomplicated. Like, that whole manipulation and stop hunts and all that stuff, that's overcomplicated. You got stopped out because your stop loss was too tight. Simple. Just adjust your stop loss, get better placement, or get a better criteria for placement, because a lot of people place stop losses and don't know why they're putting their stop loss there. When I plan my trade, I plan it from start to finish. I plan my entry, I plan my stop loss, I plan my take profit based off of structure. Not just because I want a 10-point stop loss or because I want a 15-point stop loss. If that 15-point stop loss doesn't support the market structure, then I'm not having that 15-point stop loss. If that 10-point stop loss not is not supported by a structure, then I'm not having a 2-point stop loss. That's just it. But a lot of people do it because they chase risk rewards and not chase winning the trades, right? It sounds good when you say you hit a 1-7 risk reward, right? It sounds good. It sounds real good. I wish everybody could hit a 1-7 risk reward. But it's not the reality of trading. Like, how often do market give you 1-7 opportunities? Okay, what is this song in my ear right now? If anybody else in CT want to join the Discord, just send me a message and I'll send you the link for free. I'm trying to get back to live trading every single day. But I've been a little bit distracted with side quests. 1 a.m. So it's situational. So if I'm up, not if I'm up, because I'm waking up at 1 a.m., but when I'm up at 1 a.m., if the market looks good, I will get on live. If the market looks trash, I will wait for 3 a.m. Then I'll go from 3 a.m. to 5 a.m. But if I start at 1 a.m., I will go from 1 a.m. to 3:30. So I'm mainly here for about 2 hours every single time. But if I start at 1, I will end at 3:30. If I start at 3, I will end at 5:30. No, I didn't take a trade yet, so I'll probably come back during New York. I'm not done for the day because I didn't even trade yet. But I'm tired of sitting right here though. I still like this gold play. Right now, what I'm waiting for on gold though is I want to see this low get taken and something like this happen. Like once this low get taken, it create a lower high, then rebreaks this own low. Then I'll look to take this. If this low gets taken right over here and it doesn't create this own low, then I'll look to take it up here. Then we can have stop loss. If I get entry all the way up here, which is pretty late to be honest, we have stop loss below the level, like at 80 flat. Then I'll just target a 1-to-1 just to get out the trade because it's all-time highs. I don't like trading all-time highs, so whenever I do trade all-time highs, I just 1-to-1 it until we see new structure. But so far, it's looking decent. I just needed to pull back a little bit more. Thanks for the info. It's understandable. No problem. Why did you pick the first low but not the second one? Because I'm using the one that's at current price. You asking why I picked this one instead of this one? Because this low is not tapping into the level. Price can take this low, continue higher, and then continue falling. Right? This low, like remember I said break and retest. Once I have to break, I need to retest to tap to the level. This low is not steep enough. We still haven't tapped into the level. We came close, but didn't quite get there. Remember I said earlier, even if we come close and don't get there, I still won't take it unless we tap it. So it didn't quite tap it. So I want to see this low get taken. I'm not really worried about this one because this low has no value. This low has more value because this low is also tapping into a level at the same exact time. Yes, I'm looking for support. Well, I already have the support. I'm just looking to see if this support is going to hold. Because resistance is support and support is resistance. They coincide with each other. Support turns into resistance when price goes below it. Resistance turns into support when price goes above it. So in this case, this was resistance. Price went above it. You see we have it as resistance here. Once price went above it, now I'm looking to see if this resistance can hold as support. And I'm using the whole entire level, the whole entire box, not just this wick. This whole wick right over here is the rejection area. So I'm looking to see if this area gets rejected again or if we can hold above it. Then I will have stop loss below this wick here. The reason being why I have stop loss below this wick here specifically, because this is the first candle that closed above this resistance, making it new support. And this is the lowest point before price gave me that closure. I'm anticipating that price could stay above this wick at least, because this was the confirmation that this resistance is getting broken. This will be my confirmation candle. So we have a breakout, then I'll be looking for a retest. The retest just didn't happen until all the way up here, but this was the initial point of the breakout. People that take breakout buys, they all took buys up here, stop loss below these lows. So, but I'm just a retest trader. So now we have the breakout. I'm waiting for the retest. And based off of that same thing, my stop loss will be below this hourly low. Because this was the confirmation candle that confirmed the breakout. But just because I get off stream don't mean I'm not going to take a trade. I just don't feel like sitting here in front of my computer the whole time. Like, but I'll set an alert. And if my alert gets triggered, then it gets triggered like when I'm off stream. Like, it's whatever. But I just don't feel like sitting here and talking no more. So you use daily 1 hour, 5 minutes, daily 4 hour, 1 hour, and then 5 minute. But it has to be in order. Like, I don't even get to the 5 minute if the daily 4 hour and 1 hour don't align first. So the 5 minute is only if the daily 4 hour and 1 hour goes hand in hand. Then I make it to 5 minute. But my main time frames, daily 4 hour and 1 hour, then 5 minute for entry. Did you hear my crayon analogy earlier? No? Okay, let me explain it. Because this is how I pick my time frames. So, okay, we just took this low. This looks pretty good. But the only thing I don't like is we don't have a lower high first. So now we're making a low. I need to see this. Then I can enter here. But until we make a lower high, I can't enter. So we just be making a low. I just need a lower high now. What I finna say? Oh yeah. So this is how I pick my time frames. Say I was a street hustler in Times Square, right? And I had a game in New York, whatever, right? And you used to play my game, right? The game is so simple. I'm gonna tell you the rules right now. I'm the host. You're the person that's playing. Let's role play this, right? Let me put my phone on charger. My shit finna die. All right. I have 3 crayons in my hand. Before I even get to the rules of the game, there's no hidden tricks. There's no secret. There's nothing hidden. There's no hidden rules to tell me that how I can trick you to win. The game is pretty straightforward. Okay. Everything I say is the rules. Okay. I have 3 crayons. I will show you all 3 of the crayons in my hand. I'm gonna put the crayons in the bag, shake the bag up at random. You're going to put your hand in the bag and pull out 1 single crayon. If you guess the right color before you put your hand in the bag, you win. Every game is $1,000 to play. Okay? So that's the rule. If I show you and tell you there's 3 crayons I'm putting in this bag, I show you 2 red crayons and 1 blue crayon. Right? So now you see 2 red crayons and 1 blue crayon. I put the crayons in the little bag, brown paper bag. I shake the bag up. I say, okay, now before you play, give me $1,000 admission fee. and put your hand in the bag and pull out 1 crayon. If you win, you've pulled the right color crayon that you say, I'll give you back 2,000. So I'll give you back the 1,000 that you bet, and then the additional 1,000 meaning you win. Okay? So knowing that there's 2 red crayons and 1 blue crayon, what crayon are you going to bet that you're going to pull out that bag? And why? Tell me why you bet that color as well. Okay, red, and why? Because it increases my chances. Okay. Say I said it was 1 blue crayon, 2 red crayons. What are you going to do now? I mean, no, that was the same thing as the first time. Say I said it was 2 blue crayons and 1 red crayon. Why? Because it increases your chances, right? Okay, now, if the odds was the same, where it was always 2 blue crayons and always 1 red crayon, are you going to always bet on blue, or sometimes you're going to bet on red? Man, the odds never flipped. There were always 2 blue crayons and always 1 red crayon. You're always betting on blue. Exactly. Because it makes more sense. It increases your chances. That's how I use my time frames. Because at the end of the day, trading is a game. You're betting that the market goes your direction. Each crayon represents a different time frame. Each time frame tells you what color that crayon is. So if the daily is bullish, that's 1 blue crayon. The 4 hour is bullish, that's another blue crayon. If the 1 hour is bearish, that's a red crayon. So when I go to take a trade, I'm only looking for opportunities to buy because it makes more sense to buy. Just because the odds of me winning off of a buy is a lot higher, I have more time frame telling me to buy. And vice versa. If I have the daily bullish, 4 hour bearish, 1 hour bearish, I'm going to look to sell. I'm only looking for trades that support my sell bias because it makes more sense to sell rather than to buy, just because I know the odds of me winning off of the sales is a lot higher. That makes sense? That's why I say when I come to the chart, first I want to identify bias first. Looking at my strategy talking to Discord, first sentence, determine direction of bias, higher time frame. Determine my higher time frame bias. Am I looking to buy or sell on the day? And I determine that based off of how having more time for tell me to buy rather than telling me to sell, and vice versa. So when I come to the chart, I ask myself, okay, is a daily making a new high or new low? If we're making a new high, that means we are bullish. So it's a blue crayon. Same thing goes to the 4 hour time frame. Are we making a new high or new low? Look at this 4 hour chart. Price is all the way up here. We're making a new high, broke above this previous high to the left hand side right over here, right? Another blue crayon to the bag. Then I go to the 1 hour time frame. Are we making a new high or a new low? We're making a new high. How do I know? Because this high is higher than this high. Again, another blue crayon to the bag. I'm only looking for buys now. There's no way I should be looking to sell if I see that the 1 hour, 4 hour, and the daily time frame are all making new highs. Should all 3 time frames align to enter, or you're trading the retracement, right? The more time frames that you have in confluence, the higher the probability. Same thing with the crayons. If we make it instead of 3 crayons, using 10 crayons, and now we make it 5, not 5. So we make it 6 blue and 4 red. You're still gonna bet on the blue, right? Even though you know it's 4 red. If it's 8 blue and 2 red, you're gonna even double down on a blue just because you know it's way more blue. 9 blue and 1 red, right? So the more time frames, the stronger the directional bias is, but it doesn't have to all be in sync. I just need at least 2 of them in sync. Mainly the 4 hour and the 1 hour. The daily is just like an added confluence. So if the daily is up and the 4 hour, 1 hour are down, I'm selling yes. Because the daily time frame could be bearish overall, but the daily time frame could be bearish overall, but you don't know how it could be bearish overall and it just be a retracement. So let me give you an example. Let's lose it. This is a different pair. Okay, back here. Back here on GU, right? We went bearish below this low. We have a lower low, a lower high, a new lower low. Okay. In fact, we're gonna use this one right here. We went bearish here. We have a lower low and a lower high, right? On this lower high, this is, even though we're still bearish during this time, even though this was a bullish retracement, we overall still in bearish structure. You had 1, 2, 3, 4 different bullish candle days inside that retracement. A daily time frame retracement could last a whole entire week. I'm not gonna wait for the daily time frame to flip bearish alongside the 4 hour, 1 hour already being bearish, just because that may take a whole week. Look at this: 1, 2, 3, 4, 5, 6. This is 6 days of candlesticks where it was just a retracement phase of an overall bullish trend, bearish trend. But if you look on a 4 hour in this same area, it gave you plenty of selling opportunities. See what I mean? So that's why I'm open to taking the counter trend to the daily time frame, because before it even continued the overall daily direction, it might be a whole week before it continues bearish. So it did continue bearish down here, but that doesn't mean you couldn't capitalize on these buys here, because this is still a significant push in direction. Yeah, so you will be trading the daily retracement, but it will be approaching to lower time frames. It could be retracement. Daily could be in retracement for a whole entire week. It doesn't mean I'm holding for that whole entire retracement, right? I'm still using that 1 hour targets and trading off 1 hour levels. And I'm not necessarily looking to hold that trade for that whole entire week. I'm just looking for the move of the day. That's it. I'm out of my trades before 5 p.m. So if I'm out of my trades before 5 p.m., when I come back the next day, if the retracement is done, then I just take the pro and it continues bearish, then I just continue with the bearish momentum and I take the pro trend to the daily. If the retracement not done, it's setting up for more buys, but the 4 hour, 1 hour is still bullish, it's going to continue with the 4 hour and 1 hour until one of those shift. When those shift on that lower time frame, that lets me know that the retracement is done. So back to this example. So we're making a new low, a bullish retracement, going to 4 hour on this bullish retracement. Okay. Where was it at? Okay, back here. Once this low got taken out here, that lets me know that the bullish retracement is done, and now we're continuing bearish. And guess what we did? Gave you a new low. So if I'm looking to buy here, and I'm buying with this 4 hour, 1 hour being bullish, I'm buying. Like say I bought off of this break and retest here. Okay, I got to buy over here. Stop loss below this low, and then boom. Right? Say I'm buying, like I'm scalping the buys. Like, not really scalping it, but like Monday I take a buy, Tuesday I take a buy, whatever. Right? Once the most recent high and low get taken out on a 4 hour time frame, that lets you know that the daily retracement is done. Now it's about to be a daily continuation. How do I know? Because look at the daily time frame, we're overall bearish. We're overall bearish overall. This is just a lower high. Going to the 4 hour time frame, that lower high, that high and low got taken out, which confirmed this to be the lower high, and now we continue bearish momentum. Going to 1 hour time frame, again, it happened even higher, where the 1 hour shifted bearish up here. Lets you know that this was the peak. And now we have this. But yeah. So I will take counter trend to the daily time frame because the daily time frame could trade for a whole week, but that doesn't mean there's not going to be high quality setups inside that. Just because I'm not a swing trader, I'm not looking to hold the trade for the whole week anyway. I'm only looking for the move of the day, but I use the higher time frame to determine what move I want of that day. If price is overall making a new low and it takes out the previous low, I'm going to assume that it's going to make a steeper low. Are you referencing this right here? Or were you referencing? I think you might be referencing this right here. Are you talking about this right here? Oh, because how do I know it's a reversal and not a continuation? Because those are two opposites. You can't even confuse a reversal with a continuation. Those are totally two different things. A continuation continues the momentum. A reversal switches the momentum. But you don't know if it's a reversal until it reverses. You don't know if it's a continuation until it continues. You can't predict the future. But you could use, well, you don't know the future, but you could use lower time frames to try to predict the future. That's the point. That's it. That's the importance of using multiple time frames. The lower time frames tell you how the higher time frames will close. I'm gonna give you an example right now. Let's go to the 1 hour time frame. Okay. Look at this 1 hour. We're gonna focus on this price action here. These 1, 2, these 3 candlesticks. Okay. This is a 1 hour bearish candle in the overall bullish trend. Now, I may know that this rejection is going to hold up if the 5-minute goes bullish first, and that will tell me that the 1 hour will go bullish following. But the structure is already bullish. This is just a retracement of overall bullish structure. And if I go to the 5-minute time frame, okay, let me go back to 1 hour. And 1 hour is 60 minutes. And 1 hour, yeah, 1 hour is 60 minutes. And every 60 minutes, there will be 12 5-minute candles because 5 times 12 equals 60 minutes. So to see the detail on what's going on within this 1 hour candle, you will need 12 5-minute candles. Okay. So 5-minute structure tell you how 1 hour will close because that's 12 different candlesticks of data. That's a lot of time frame. That is a lot of time to show you a trend. So whenever, let me backtrack a little bit. Understanding that in every 1 hour candlestick, there is 12 5-minute candlesticks. That 5-minute structure will tell you how that higher time frame will close. So, I'll give an example. Let's focus on this 1 hour candlestick right over here. Well, actually, not on this. Just focus on this candlestick right over here. Not this one. This one right here. Because what happens on this candlestick tells you what's going to happen with the rest of these candlesticks. So now we're going to go to the 5-minute. What time is this? 10 a.m. Go to the 5-minute chart. Go back to 10 a.m. Guess what you have at 10 a.m.? Well, let's go right over here. So 10 a.m. right over here, this was the open of that candle, that 1 hour candle. Inside that open, you have a low, lower high, an equal low, a reversal. Right? How do I know that? Because if I just take this price action and just move it down here, you see we have a reversal. This 5-minute reversal that happened right over here is the dead giveaway that the 1 hour is going to close bullish. If I go back to the 1 hour time frame, what did you see here? Right after you have this 5-minute reversal that happened at this exact line, I have a massive bullish engulfing on that 11 a.m. candle. I'll go back to the 5-minute chart and show you that 11 a.m. 11 a.m. was actually Okay, it's the 12 a.m. So it's 11 a.m. open, 12 a.m. close. So all the way up here. This is where it closed at. But that happened after the 5-minute shift structure. Give 5 minutes, give you that reversal. And that reversal signaled you, letting you know that this 1 hour most likely going to close bullish, just because the 5 minute goes bullish first. It has to happen in order. In order for the 1 hour to show you a bullish candle, the 5 minute time frame has to be printing higher highs and higher lows. In order for the 4 hour to show you a bullish candle, the 15 minute, 30 minute, not 30 minute, the 1 hour has to be showing you higher highs and higher lows. In order for the daily candlestick to give you a bullish candle, the 4 hour has to be showing higher highs and higher lows. That's just how it works. So you just showed a reversal after a low took a low. Sometimes a low takes a low and continues down. Yeah, so a low taking a low and continue down will look like, let's make it bigger. Like this. This is a continuation. This is not a reversal. And I said before, in order for it to be a reversal, you don't know. You don't know until it happens. That's what I said earlier. You got to be able to spot changes of directions. Like I said earlier, a bullish market doesn't go bearish until it takes out the previous higher low. So if this is a bullish market, it's going to remain bullish until price takes this low. If it's a bearish market, it's going to remain bearish until price takes this high. That's it. So if I'm looking at this back here, say I don't see anything to the right. Say I don't see all of this and I just see this point here. I don't know this is going to be a reversal. I don't know that until we shift. Give me my market structure shift. Once it shows you the reversal, then you know it's a reversal. I'm not trying to predict it. I'm not trying to call the bottom. You're not going to ever see me say I top tick or bottom tick this move, like how ICT traders do, right? I'm not trying to predict the bottom of the market and catch the reversal to the pip. I wait for the reversal to happen and then I just ride the reversal. Now, sometimes you may see price do something like this. Yeah, ride the reversal, but you only, in order for you to ride the reversal, you got to wait for the reversal to happen. I'm not trying to predict the reversal. I don't know if it's reversal until it reverses. And I don't know if it's going to continue. And I don't know if it's a continuation until it continues. Like, I don't know if this is going to continue down here. Like, come down here and then continue down. But I do know that if it comes down here and then comes back up here and then gives a reversal on the lower time frame, meaning if this is the 1 hour time frame and our 5 minute time frame looks like this, then it gives me a 5 minute reversal on the 1 hour time frame structure, then I know that this is going to be a continuation. The lower time frame reversal is letting me know that the higher time frame is a continuation. There we go. I think I nailed it with that explanation. Yeah. So I don't know if the 1 hour is going to be a continuation, but I could anticipate the 1 hour will continue if on that retest, that 5 minute gives me a reversal that supports the continuation that I was already looking for. I'm gonna wrap it up here though. It's coming on 4 o'clock. I'm gonna lay in the bed. Let's look at gold again real quick. So far I'm going to 5-minute chart. We still continue down. We haven't made a significant lower high yet and a new low. So no real entries yet. I just need to see structure form. So we having a retest, but the retest is quite aggressive. So I just still want to see price give me some kind of structure here. It don't have to be this many series of lower highs. It could just be 1 or 2, right? The lower highs, but I just need at least one of them to actually trade off of. Until we see some kind of lower high in this area, I'm not going to actually take this. I'm not going to take it until I see a lower high confirm and get broken. Then I'll actually take it. But other than that, if it just continues down here, then I'm avoiding a loss. That's why I wait for confirmations or with my overall bias. I do have a bullish bias, but I need price to confirm that this level is going to hold before just randomly buying at this level. Thanks for answering your question. No problem. Thanks for your engagement. But it's your boy Traderholic. If you want to join my Discord, send me a message on TikTok. I will send you the Discord link. I also live trade on YouTube as well. At the same time, I live trade on TikTok. So if it's something that I explained during this whole time on TikTok Live that you want to revisit or you want to hear me say all over again, or it's like you didn't quite understand, you just want to reiterate it, go on my YouTube, which is this right over here, Traderholic FX. Go to my lives, then you will see all my past broadcasts. Okay, you see all my past broadcasts. So if you want to rewatch the vibe for this live, then this will be right over here for you to rewatch. What's good, Chris? I didn't even know you was in the chat. Also, if you want to see me explain other stuff or any YouTube video ideas that you have, just let me know. Comment them in the Discord, and I will happily make a video explaining something that you don't quite understand, whatever. Also, already have old videos from me just posting YouTube content. If you want to watch them, like me explaining how to read price action, pre-market breakdowns, stuff like that, live trade breakdowns, all that kind of stuff. Similar to TikTok, but more so in longer form content.